Hello everyone, this is Evan here from the Trade Risk on Friday, July 15th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then I have a few trade ideas for us to take a look at the end of this video. Now, if you haven't yet subscribed to our YouTube channel, please do so, bottom right hand corner. Been doing some live broadcasts once a week or so. It keeps you up to date with everything that we do there. Also keeps you up to date with these videos. So YouTube channel, bottom right hand corner here, you can subscribe to stay up to date with the latest. Now let's jump into the action. This is a weekly time frame. The SPY ETF tracks the S&P 500. We closed up 1.5%, and you can see we got that follow through breakout higher. We are convincingly above previous 2015 all-time highs. That should be clear by now. Let's take a look at the daily time frame and take a look at how this week progressed. It was essentially just climbing that, I don't know if I want to call it a wall of worry, but it's just floating higher here, stretched and just leaving people kind of in the dust. If you're not willing to pay up, or if you want to fight this market, it's continuing to keep the pain on the people either missing out or fighting. So let's take a look here. Monday was the day we made new official intraday all-time highs in the S&P 500, continued higher Tuesday, Wednesday, and Thursday. Friday was our first day of pause where we closed down basically flat on the day, down 13 basis points. So notice a few things here. One, we are still very much extended away from the 8-period EMA, although I will say, like I've been saying, in these breakout conditions, the initial breakouts always are the strongest. That's when you get those overbought conditions that continue to persist. And actually, if you were to even throw on some Bollinger Bands, even on this chart here, which we'll do right now, we'll clean up some of this stuff, and you take a look, we actually are not piercing outside of it. We're riding along the standard 2 and 20 Bollinger Band, upper band here, and we're just grinding out highs. Notice the bands are expanding higher, exactly what you'd want to see, that volatility expansion in a new type of breakout move. So everything is going to what, if you're bullish on this market, everything's lining up and happening just as you'd want it to. If you're a fan of measured moves based on projecting the first leg swing high, low to high, with a little bit of a pullback here, you could say that this move might get us up to about 218, 218.50 if you're a fan of that. So keep an eye on that. Perhaps we get some more follow through early next week, or maybe this first, even though it's barely a red day, maybe this is going to just kind of continue on with some weakness here early next week, and we will get some type of pullback early next week. Let's go back to this default view. At either way, though, I think you have to be constructive on this market. I think pullbacks are still opportunities at this stage of the game here. That's the way I'd look at it. I'd welcome a pullback, even though we're still long and we still have a reasonable amount of long exposure on. I still wouldn't mind seeing a pullback, reset some of the charts. There's been a lot of names working, breadth is strong, all the same things that we've been talking about. Clearly no overhead resistance we need to really cover. On the downside, you get the 8-period here, and really, if you go back to that weekly chart, here's the big breakout line. So if you're an intermediate to longer term player, this is really your line in the sand. This is about 210 area in the S&P 500. If we were to fall back below there, then perhaps we get some nasty kind of failed breakout move that could bring us back lower into this range. But until that sort of doomsday scenario happens, I really think it's better spent energy looking for opportunity on the long side, listening to what the market's trying to tell us here, and trying to get long. That's the way we've been going it. That's how we've been playing it. And coming into the week, we had about 100% exposure into this market. We've slowly been trimming that off, taking profits every day of this week. We've been kind of trimming that off as winners kind of extend in our favor. And we have picked up some new names as well, put on a new position at the end of the day today. So we went from about 100% invested, 95% invested at the beginning of the week, down to about 50 to 60% to end the week. And we're still looking at this market again as risk to the upside, where we want to be long, we want to be playing for these gains, recognizing we are overbought, but recognizing that is sort of the new normal right now, given where this market's come from and kind of what it's doing. So if we look at some of these other major indices here, IWM back to this 120 level. We discussed this 120 level a couple of times now in our previous videos. You can see this is where the market has stalled out and found resistance multiple times going back to the past few years. We're right back at this level. It makes sense that we're pausing here, so it'll be interesting to see how this reacts next week. We pushed above it, and then we just kind of pulled off of those highs, and then are just hanging out right underneath them. So we'll have to see how that shapes up next week. But so far, IWM still is constructive. Qs also very constructive week. I know we're not at all-time highs in either of these indices, which are looked upon for risk appetite and to lead us higher, but they're still performing well. Qs just got this breakout of this miniature pattern here inside, still a good size pattern, but miniature in the sense of this larger term potential range that we've been in for multiple years. But like I say, we're in motion here. We did break out above these prior two highs, and looks like we could be heading up to this top of this range around 115. Now, most of this market moves recently are going to be very much influenced by earnings season as it continues to progress. S&P 500 with these high financial weightings, which came out pretty good, above expectations. Whether or not they were great, they were still above expectations, so that has helped. NASDAQ will start reporting some of these big cap tech names that are looked upon as growth names and leaders. Will be starting to report, I believe, next week already, and that'll be of great interest to see how the Qs react. Can we hold 110 in the NASDAQ 100? That's going to be your line in the sand here. So keep a close eye on that next week for some of that movement. Now, moving into some of the other markets here, TLT is continuing to pull down. It closed on the dead lows of the week, retracing all of the last 2 weeks progress to the upside and coming right back into the gap that started the week of July. So if we go back to the daily time frame here, you can see we had this initial gap down on the 12th here. This was Tuesday, I believe. Yep, Tuesday. We had this gap lower. This is where things looked a little interesting. Island top looked concerning. But then you got a gap in the exact opposite direction Wednesday. It kind of filled this gap up higher, and then we gapped again on Thursday. So we're all over the place with TLT, but it looks like we're coming off of these highs pretty quickly. Be interesting to see if support can hold right here. This move is happening pretty quick. It was really stretched on the upside. We knew that, and this move to the now downside is coming at pretty quick rate as well. But on the weekly chart, you could see really there's zero technical damage here. We're arguably only pulling back, not even to the 8-period EMA. This is still considered a strong trend on the weekly time frame. So depends where you live, depends what your time frame is here. TLT could be making a healthy retracement, or you could be looking at this as some type of bigger reversal. Is this the top right here? Absolutely, no one knows, but it'll be interesting to see how this plays out next week. Gold also kind of coming off a little bit this week, closed down 2.82%. Same exact thought process here. Weekly chart still in a strong trend, not even back to the 8 EMA, 8 and 20 still bullishly rising, still healthy there. Daily time frame, perhaps you're a little bit more concerned, also coming back to some support areas. Silver holding up a little more resilient. Weekly chart, not much damage at all this week, not much of a pullback, that is, way above the 8 period, so this is still extended frothy. Silver's holding up real strong right now, so that looks pretty good. And USO, let's go there next. It's been interesting, a lot of choppy, volatile action right around this $10.70 to $11 area. 8 and 20 are curled down on the daily chart. Weekly chart looks very vulnerable here as we've been breaking down from this wedge and kind of channeling lower. Monthly chart, of course, we know is extremely bearish. So it'll be interesting to see if the bulls can put in some type of higher low here at 1060, some structural higher low, like especially when looking at like a weekly chart. That would be very constructive if we can start to hold up here, put in a higher low, and then start to rally higher. Be very constructive. It's yet to be seen. We'll have to see how that plays out in the coming days and weeks. UNG also pretty interesting. I like UNG. I almost got involved in it on Friday, but we're going to pass on it for now. Just want to see a little more support and kind of confidence come in here around this $8 level. I like the fact that it opened up on the lows and had a nice rally, still stuck in this range, but it is pulling back to this 20 period, had a nice run up through June. It's consolidating right here, so it's definitely got my interest. I'm watching it closely. I think it could be an emerging trade there. Weekly chart, you can see 820 curled over, and that could be heading higher. So that's it on some of the big markets there. As far as individual sectors, there's really been a lot that's working. What's not working, or what's just lagging a little bit, would be XLU, but still very healthy consolidation here. It pains me to even say that it's not working or that it's lagging, because it's still just very healthy given the moves that it's had, but it's coming back to this 20 period EMA. Very healthy action, consolidating a bit. That could be a nice setup into next week if we can start to get some type of breakout here in XLU. The only other sector I'd point out, which is just a little sluggish compared to the rest, would be energy, but it's still in a great looking formation. Also very actionable if it can start to lift above these recent day highs here, above 69.70. I think that one could start to lift. It's got a nice base that it's been developing in. Everything else seems to be working itself higher. Technology, industrials, all the other big sectors there, even financials getting a little bit of a comeback here as of late. So that's sort of the sector look there. Let's look at a couple of individual names. Apple's one. I do like Apple here as some type of trade into earnings. It's not enough that it's not my kind of setup. I'm not going to take it. I don't have a position in Apple from a trading standpoint. I do own Apple in my longer term account, and but it looks like, especially with this bar yesterday on Thursday, pushing us high here, getting us above some of this recent choppy mess. It looks like maybe it can continue to float higher here into earnings, but still, looks pretty range bound and needs a catalyst, and earnings could be that. So maybe a trade up to $100. We'll see. But Apple holding that support, $93, very obvious support, but it's hanging up there, and it looks like you got a very clean kind of pattern here in Apple. So it's going to be interesting with a lot of eyes on this sort of support over here, this trend line coming down from the all-time highs. Going to be interesting to see, but maybe some type of float up here into report. Also, let's take a look at Amazon, which has been leading us higher, but it did come off a little bit on Friday here, down 78 basis points. It's had a few days of weakness ever since extending above 750. We were long this coming into the week. We got long it last week on this breakout bar here, and we did sell some above 750, and then we got stopped out here on Tuesday. So we were no longer in this trade, got a quick gain out of it, but be interesting to see. Again, this will have earnings coming up soon, but if Amazon starts to lose this line, this breakout line right here, right around 730, if it starts to break down from here, you're going to have some of those aggressive shorts, and you're going to have people looking for further downside action after a failed breakout. That will be the narrative. So it'll be interesting, and maybe not a bad narrative given how far it's run. Still, though, longer time frame, it's still a monster on all long-term time frames. But earnings is once again going to probably get in the way of any type of clean technical trade in the near term. If we look at Netflix, we discussed how it's starting to eke itself out from the top end of this trend line here. Once again, I believe we have earnings. I think it might even be Monday in Netflix, so keep an eye on that. And then finally, Twitter, which continues to just grind higher above the 8-period EMA, just minding its business, kind of just hanging out above the 8-period, getting a little choppy here the past few days, but it is above $18. That's constructive. Weekly chart, you can see finally going to start to get that 8 and 20 crossover, perhaps. If those gains can hold in there next week, you might get that crossover. So keep that on watch. Earnings, again, will be coming up pretty soon. Now, as far as some trade ideas, a few of the names that really popped up on my scan, FCX. The issue with FCX, and the issue with a few of these actually, are that earnings are going to be coming up, but the weekly chart on FCX looks great. You can see it had this nice strong thrust off of the lows here in February, spent a good amount of time consolidating that, almost triple in price, or maybe even more than a triple in price from the lows to these highs. Spent a couple of months consolidating them, and then you really had that nice breakout bar today. I like it. Probably would be involved with it if it weren't for earnings coming up pretty soon. Similar comments go for CME Group, which is breaking out to new all-time highs here. You can see it's taking out this $100 level. That's been holding it back, but once again, actually not all-time highs. This is back in '08. This was $140 stock, so not quite all-time highs. Certainly new, 10-year high, or 6-7 year highs, but This still looks good. I like it. Earnings will be up though pretty soon. I think it's in a week or so. So another reason I passed. And even KMI, another one that looked real good today. Looks good on the weekly chart. Nice strong breakout after some nice consolidation here. I like these types of plays. Earnings are coming up though. But for you shorter term, traders or even intraday traders looking for some momentum in some of those higher time frame, good looking patterns, keep those names on watch. Hopefully I'll have some more ideas out on the stream later this week. That's it for now. I hope you guys enjoyed the video. If you haven't subscribed to our channel, please do. Bottom right hand corner. Thanks for always. Have a great weekend. I'll catch you next time.